What's up, everyone? Welcome to Frog Radio. Afternoon, it's 1 p.m. CST for me. We've got the guys from TokenTax here, which is who I used to do my taxes last year, and they did a fantastic job, especially considering that I had a lot of DeFi transactions. So if you were in my shoes last year or even this year too, it's definitely going to be wise to listen up to today's episode. Once again, taxes suck, but unfortunately, everybody has to pay them, especially if you are considering improving your life outside of the metaverse, and you don't just want to flex by owning digital land, whatever the hell that is, or the latest profile picture. If you improved your real life, if you cashed out to the bank, this is aimed at you. You've got to pay up. You got to pay your taxes. They are sniffing around and they are going to find you. Unfortunately, and fortunately, when things happen on the blockchain, when you do DeFi, it's forever. So even if they have no idea what the hell is going on right now, and when I say they, I mean, the IRS, different tax agencies, there will be a point in time where they have adequate tooling and they will be able to go back and they will be able to match your address to who you are, if you've off-ramped, and you could get in some trouble. So guys, welcome, TokenTax. Thank you so much for being here.
Yeah, thank you so much for having us.
And I think, I'd just love to start off by asking, when Avalanche, because I've got a lot of transactions in Avalanche, and I was trying to be responsible. I was trying to do some end of year, tax planning, just to have a general idea of what the damages are going to be next year. And I hope, fingers crossed, that the number came across a lot higher, because it just kind of saw, it didn't realize that there was any cost basis or anything for anything that had happened on Avalanche, because it didn't exist. I wasn't able to upload that data source.
Yeah.
Great. I have great news for you. So we just launched a beta Avalanche integration today. That means you can connect your address and import all of your transactions. However, caveat, they'll come in as transfers and not taxable, and they need to be reconciled. And that's, what our team can do, but it also can be done by yourself. We have some helpful guides that can kind of help you, plug things together. But as the year goes on, we're definitely going to be adding automated integrations. So it's at the same point that our ETH integrations at. And hopefully we'll support all of the major protocols very soon, but it will take some time. However, we have the data.
And let me just throw, and that's our optimistic engineer, Alex. So step one is there for you. We actually have the data in and out. And then this is Zach over on the accounting side. So step one is we actually have the ins and outs on your wallet. So that's a great first step. Step two is we have to know which of those are income, which of those are trades, which of those are spends, which of those are mints. So we're still quite a few steps away from like the magic of where we're at, even with ETH, where, we're probably 80%, we're able to support 80% of the transactions that come in. But even ETH is a giant game of whack-a-mole, as you probably know, where it's like, hey, we support Uniswap. Oh, and now there's a V3. We support this and that. Oh, now there's a new transaction type, or now there's, this new, oh, you're taking that future, wrapping it, shorting it. So anyway, it's an iterative process. It keeps the engineers kind of infinitely busy. But the goal is eventually every chain will have that same level of support. But the problem is it needs to be built in a hierarchical way, one by one by one. And kind of the challenge is, and the reason why you don't see the tooling yet for Avalanche and for Solana and for BSC, those chains are thousands of times larger than ETH. They're a lot cheaper because there's so many more blocks, to oversimplify, but that makes the engineering challenges of supporting them so much harder. So anytime you see, even if you see, oh yeah, we'll announce, hey, we have Avalanche, what that means is we can get your ins and outs. That's step one. And again, we're working as hard and fast as we can, but that's why everybody who's in your situation or, anyone who's DeFi degen, get ready to go on extension, pay an estimate of your taxes, and let's let the engineers build and build and build and build and worry about filing by October. that should be people's real deadline. But exactly as you said, an ounce of prevention saves a pound of cure when it comes to end of year tax planning of like if you're underwater on things. But I won't skip ahead there. But I just wanted to add that caveat before people get overly excited. But it's a great first step.
I do enjoy the process of uploading all my data and letting someone else do it. And you guys will have to talk about like in a little bit, what it actually takes, because I know you have multiple tiers to your plans. So what it actually takes to have somebody else reconcile all of your stuff, in the different tiers that are available there. I do have a question though, and I'm sure a lot of people are kind of in this multi-chain boat with me right here. I've done so many things in so many different chains right now. I don't even know how the hell I'm going to be able to get an estimate, right? So what is there another way to get an estimate and it be legit, if we're not able to really drill down something super accurate?
Yeah, I mean, there's algebra basically. So there are snapshots. So in a perfect world, we have the tech stack catches up. You plug in your wallets. Almost all your taxable events are rolling in properly, and we're quarterbacking it. We're jockeying. We're trying to be a software company at our core, and we're trying to automate these. We're not trying to do hours and hours of manual reconciliations forever, because that just doesn't scale, as you know. But for right now, let's just say the Avalanche, we don't have any support for the taxable events. We could do things like this. The ETH, we have it a lot of the way there. We have the centralized data. We have your Avalanche. What we're telling everyone to do: take snapshots of all your wallets, of your whole portfolio, because that's going to be your get out of jail card with the IRS. If they come someday, like you mentioned, they're working on tooling. Eventually, they're going to have better blockchain analysis for all these other chains, and they might accidentally think, hey, you made $8 million, prove to us why you did it, because the pricing was all messed up on the obscure yield farming you're doing on whatever coin, or the price spiked because they're using CoinMarketCap or whatever, they're using third-party pricing tools. And so we're manually going in like transaction by transaction, overriding that pricing. And so for you, what I would say is take a snapshot of all your balances, especially Avalanche. Let's just say you got 100,000 on Avalanche, in your portfolio or whatever, and you put in 10,000. So we could say worst case scenario, you have 90 grand of income on there, because that's what's taxed at the higher rate. If any of that's long-term capital gain, that's even better. We try to figure out what the worst case scenario is, and then we back it out algebraically. So any accountant can do this, but this is what we basically do for our clients who are, we have the VIP, which is basically, hey, give us your data, give us your ETH addresses, give us your centralized data if you're just on ETH, and we'll figure it out for you, sometime after the year ends. You can plug in your stuff and see what the tax loss harvesting dashboard says. But after year end, we'll figure it out for you in time for you to file by October. That's kind of the commitment. And then we built out this enterprise practice on top of that has extra functionality for like, hey, I have multi-million-dollar losses on NFTs. I urgently need to know what I can sell before that, really, really high materiality things. That's kind of beyond the scope of VIP. So those are like the packages we have, and those are all kind of custom. Unfortunately, only so many hours in a day, but the software is there for those of you who have centralized data or just ETH. We hear all the time, this worked so well for me right out of the box. But if you're like more and more degen, messy, then it becomes harder and harder and requires more manual effort.
Yeah, I got a question. I mean, I bought your VIP package earlier in the month.
By the way, can you promote Janky Warhol as well?
Yeah, Messi can do that.
Come as a panel.
Janky Warhol. I actually had that question, and I'm sure that's come up for the audience. I like to try to ask questions that are relevant to the audience too. But I bought the VIP package, and I'm curious because I am been pretty degen this year. I think, especially when you like market buy something on FTX and it counts as like 40 transactions. I've probably got like 80 to 120,000 transactions. What is the limit to that VIP purchase when it comes to hours spent reconciling? Or how do I?
No, we can still hear you, Zach. Sorry, go ahead.
I'm just curious, like how do you manage overtime?
That was all. I mean, but so would be happy to jump into the Q&A and just try to give people some useful advice before the end of the year.
Zach, you might have cut out.
I think you missed my question.
I can briefly rephrase it.
Okay, yeah. in a nutshell, basically, what's the overtime look like on a VIP package if, say, somebody has something ridiculous like 100,000 transactions to reconcile across like every chain?
We really want to look at those. It's not all transactions are created equal, and so that's what we've been doing lately for folks like that is just having a lot of calls to understand the specifics of your transactions and like what your 100,000 transactions on like a centralized exchange is one thing. 100,000 transactions across like Harmony and Solana is like something totally different. So a lot of it depends on the specifics that specifics of your transactions, what protocols you're interacting with, and what kind of activity you're up to. So we don't like to be too broad in answering that question, just because it really depends on what you're doing. If you're super degen and like interacting with a bunch of things that even we've never heard of, then it can. There's a significant amount of
one thing I would have to add specifically for the FTX question though. There's a number of things that you can do. I mean, I think you're pointing out that fills just create an insane amount of data. It can be aggregated and like brought down, so it's easier to work with. There are things that can be done, and we've definitely seen tons of this stuff.
Okay, yeah. No, I guess the question would be like beyond VIP, is there a point where you hit like an hourly?
Like, the last thing I was just trying to say is like it can just be an algebraic puzzle of how much your portfolio is worth, how much it was worth before the end of the year last year, and you just work backward. You say, hey, I have $1 million, and I put in 100,000 at last year, and 600,000 of that increase was this one token I haven't sold, so I don't owe any taxes on that because it's unrealized. And you can kind of solve it that way. Anyone can, just on Excel, just from snapshots. No matter who you are.
I think Zach, we can you hear us?
Yeah, I can. Sorry.
Okay. That was one question ago.
Yeah.
But yeah, did I answer your question?
Yeah, that makes sense. Thank you.
I think you were asking. I think there was another question as to like whether there's were you asking whether there's something above what we were talking about here?
Say you go VIP and it does end up being extra hours. What does that extra charge or scope of that look like? Because we do have a lot of degens in the audience that are probably well into the grease on those staking rewards and claims and all that crazy stuff.
Yeah, we've probably talked to a number of them because when you have all that stuff, just from a TokenTax standpoint, we're trying to make sure that we can stay, maintain a sustainable business model, and a lot of that stuff does take manual effort or expertise from people that are working on sort of larger engagements for us. So we do have, and we will be rolling out soon, sort of public information about this on our website. We do have, I think, as Zach mentioned, this enterprise practice that's for those people, for the people, a lot of the people that are listening to this space that it's not, not a specific price point, but it's generally sort of a more, what we call a prestige offering that tailors to people that are in the community that are doing all sorts of wacky stuff. And so, there is a level above VIP for that. It's our enterprise practice. We'll have information on that, more published information on that soon.
Okay, sounds good.
We'll find you directly. Don't worry.
Yeah, I'll ping you after this.
Yeah.
I actually got a question, and this is something I've wondered for a while. Who should be making quarterly tax payments versus yearly tax?
Yeah, that's a really good question. So the general answer to that is if you're making income from a job where your tax is withheld from your paycheck, you're mostly okay. But if you're generating income from other sources where the tax isn't coming out sort of periodically, then the general answer from the IRS is that they want their money now, right? They want it concurrently. They want their share as you're making it. And so the general answer is anyone who's making income or who's making money from sources where there is not existing withholding happening, you should be making quarterly estimated tax payments. Now, that gets a little bit. That's the broad answer. That gets a little bit dicier in the crypto community, because a lot of people are like, well, I don't want to be handing over, a chunk of my earnings until I absolutely have to. And so then there are rules that say, this is how much you are required to make on a quarterly payment basis, or you're going to hit, penalties and interest and stuff like that. But the general answer is if you're making significant money, you should be making quarterly estimated tax payments. There's also something that you can avail yourself of called the safe harbor, which basically lets you, if you don't know what your income is for the year, or if you're, making, let's say, a lot more this year than you made last year, as long as you pay in a certain percentage of what you paid last year during your quarterly while you're making your quarterly estimated payments, then you're sort of free from the penalties. You're going to have to pay your tax eventually, but you're sort of like off the hook for being majorly
let me add
penalized.
one thing to that, because every day I've been having conversations with people who say, "Hey Zach, I made my safe harbor last year for 2020. I paid 100,000 in taxes in 2019. I paid 110% of that, 110K. Why did I just get a massive bill from the IRS?" And it's because there's two things. There's penalties, but there's also interest, because your taxes are due quarterly throughout the year. Even if you make a safe harbor amount, to be super specific, even capital gain income qualifies for this. So if you owe the IRS 400,000 because of your capital gains for the year for 2021, and that's your tax bill just on those capital gains, what they say is you owed us that money last April 15th, last June 15th, last September 15th, and the fourth payment of 100,000 is due this January 15th. So by the time that we're having this conversation right now in December or next month in January, people are already accruing interest because they haven't paid the IRS that amount. And then there are a bunch of other special rules. If you make over $1 million in California, safe harbor doesn't apply. So safe harbor just gets you out of one part of the penalty. It doesn't get you out of the interest. And there's a lot of confusion about this. So I really want to drive it home, because so many people are like, hey, I know it's the cost of doing business. I'm making so much more money yield farming and APY and that's fine. That's not tax advice. Some people can decide not to pay it. That's your own decision. But we just want people to go into it with their eyes open to the real costs, if that makes sense. Is that clear?
Yeah, it's clear. And once again, California is down bad. Okay. So I think this is a great time to open this up to Q&A. I'm sure a lot of people have specific questions. Now, guys, let's be mindful. We don't have these guys here like all day. So please keep your questions pretty short and sweet. You are going to be recorded. You coming up is consenting to being recorded. We don't record the video of the space, so nobody will be able to match your voice with your profile picture or whatever. But your voice will be on our YouTube, on Spotify, etc. So just be mindful of that. Here's how this is going to work. I'm going to go to a moderation role. I'm going to invite people up to speak. Random Task is going to be calling on you guys. Please wait to speak until you're called on. When you're called on, ask your question. TokenTax guys will do their best to answer it. Please be respectful to them and of their time. And let's get rocking and rolling.
Let's do it. I will call you by name, so that will match your voice to your name, but just, be aware. X Cold Plunge, what do you got? Loading Wheel of Death. Oh, there he is. We'll give Cold Plunge one more second to unmute. There he is. Hello.
Howdy.
Welcome to Frog Radio. What do you got?
Thank you for having me. So I use TokenTax, and I have kind of gone through and done all this stuff, gotten an estimate. And one of the things I was wondering about is wrapped ETH, because I have, to the best of my knowledge, looked through, fixed any errors I could find. But currently, it seems like TokenTax is having issues around the amount of wrapped ETH versus ETH that I have, and I think it's affecting my cost basis. So I'm wondering if you guys have any experience with that, and what maybe some things I could do to help are.
Yeah, definitely come talk to us on Intercom. We have this problem all the time, and you can imagine why it's happening. But essentially, that's the manual work that goes into hey, if it's selling ETH and you have missing cost basis, but you actually have a bunch of wrapped ETH, something's just missing there on the wrap transaction. And usually maybe even one manual transaction or something missing can solve dozens of errors of missing cost basis. So don't worry about that too much. Now, there is another complicated wrinkle that you bring up, is wrapping a taxable event. It's absolutely a gray area. And so people don't really know. Is it like moving dollars from your Chase checking to your Chase high yield? And there are a bunch of deeper questions here. But yeah, at the simplest level, come on intercom on the bottom right of our screen, say, hey, it looks like my wrapped ETH is, I wrapped it here. I did this, I did that. Can someone take a look? And that's what we'll be happy to do.
To be super specific about this happens all the time with various things. And a good example of this is if you enter a liquidity pool on Uniswap with ETH and like some currency, and then you exit the liquidity pool, and then you get WETH. So technically a trade happened there, but unless we filed that as a trade, then you would have a bunch of WETH, and then if you then later sell that, we don't know the basis for that WETH because it actually is ETH. So that's like one very specific example of how it works.
So, and just like related to that, if I go to the tax loss harvesting in the top left, it basically shows a list of all the tokens that I hold. And should that list essentially be telling me like exactly what my portfolio is right now? Like if I have done everything correctly, will that report roughly all of my balances for all the tokens I have correctly?
Theoretically, but obviously you have to use common sense. It's just a tool that we put out there to try to be useful. But if you don't hold that token or the balance is wrong, but yes, to be very specific, that's a great North Star to figure out what may be missing from the data to get those balances to tie out. But don't be so stressed. Like anybody with a lot of crypto data, anybody degen is going to have slight variances, and it just takes time to work that out. But yeah, in a nutshell, yes.
I do have one more question. I don't know if I've asked too many. Is that cool if I ask one more?
We'd like to rotate as best we can. We will usually run out, and then guys won't get any. But I appreciate you checking before rolling ahead, because a lot of guys just roll through with 3 or 4, and it gets off.
Yeah, broader questions are good versus specific questions. But yeah.
Well, this one is broad. I'll just ask it and then answer it or not. But what is the minimization? How does that work? Because I know there's first in, first out, last in, first out. And then I don't really have a lot of clarity as to what the minimization equation is.
Yeah, great question. So in accounting, and this is going to be a really, really condensed version to a very long answer, but there are 2 worlds of accounting. There's average cost, like you mentioned at the beginning, that, in Canada, average cost is required. We add up all of the Bitcoin you purchased, add up the dollars you put into it. When you sell any of the Bitcoin, we use the same average cost for all that. That is one world of accounting in a Venn diagram. That's what's required in the UK, et cetera. Then the other world of accounting is specific identification. So a lot of people erroneously say, oh, FIFO or specific ID. And that frankly shows they don't understand what they're saying, because FIFO is a type of specific ID. If you can identify the tax lots, FIFO, LIFO, HIFO, LOFO, all of these imply a level of precision that you're tracking the tax lots. For FIFO's first in, first out. So what minimization is basically just being a rational investor. It's kind of our proprietary algorithm of like, hey, and it's same as what high net worth people, hedge funds, Merrill Lynch do for their clients for stocks. Like if I have Google shares, to drive it home for you, and I've been dividend reinvesting for the last 10 years, and I go to sell some of my Google shares, I'm not going to sell the oldest ones because I don't want to pay a huge capital gain. That would be FIFO. I also don't want to do LIFO because I don't want to have short-term capital gains that are taxed at maybe double the rate, right? So what I'm going to be is a rational investor. I'm going to sell, the lots that get me a loss first, and then I'm going to sell the lots that get me the smallest long-term capital gain, because long-term capital gains are preferable. So, that's an oversimplification, but yeah, it's basically just helping people be a rational investor. And it's, intent matters. People are, oh, I want to go back and amend. I filed FIFO. That's not how it works. It's about when you understand how these things work and you track your tax lots. We're trying to make a tool to try to, educate people about personal finance, what's possible. But yeah, the IRS did right. Hey, specific identification, as long as you can identify those tax lots, is allowed. So apologies for the shortened answer. If you want to talk more about that, we could do follow-up, or you could come by our site. But in a nutshell, that's what it is. Hope that kind of clarifies things.
That's great. That's awesome. Awesome answer. Cool. I'll hop off. Thank you very much.
Awesome.
Cheers. Great questions. Thank you. Soul Dog, join us.
Hey, yeah, I was just gonna ask if TokenTax has Solana support.
Definitely not. I mean, it's like enterprise. So we're adding the blockchains in a hierarchical way. So if you asked Alex, he would say soon. We're working on it, and we absolutely are working on it. Solana is the biggest. I mean, it's It's so much larger than ETH from an infrastructure, from an engineering challenge. So look, we're doing our best and we hope to support it, but it is kind of like the most third railish of chains right now. And this kind of goes back to like before rushing into your 2022 activities, guys, before doing a ton of stuff on different chains again. We love the technology. We love exploring and messing around with things, but also just feel free to ask, hey, do you think this will be supported? When will it be supported? Or is this going to kick me into like something that's going to take months of manual work going transaction by transaction on, blockchain explorers? But right now we don't. But look, we're working as hard as we can. And this is why I said, go on extension, see how far all the tools get. We're not trying to reinvent the wheel. If anyone comes up with a cool tool, any board engineer makes something useful that handles your whatever little niche of Solana you're doing with the NFTs, we're all about using whatever is out there to solve our clients' problems. But right now, it's not out of the box like ETH level at all.
All right, man. I appreciate that.
For sure.
And you mentioned NFTs. Are you guys supporting NFTs?
I mean, we're doing our best to support NFTs. The NFT support has gotten more robust. Yeah, Alex will say yes or soon, but I'll say
no. Definitely, I can tell you all that we support on NFTs because we do support a lot. We support OpenSea. We support all ERC 1155 and 721 transfers. We support Foundation. We support Super Rare, including all the Foundation income that you get if you're a creator. And yeah, we support the Bored Apes contract, all generalized mints. So if you're just minting random contracts, those will all come in with the correct cost basis. And we also support punks. So yes, we do support NFTs, or the vast majority of things that people are doing.
Okay, I'm sure we have a few people in here that'll appreciate that.
This is a pretty cool opportunity for people, by the way, who might have losses in NFTs. You can sell that if you bought it and you put $3,000 into it and it's worth 200. You can maybe sell it on OpenSea, just for a little tip here, and get that $2,800 capital loss in a year where you may have had nice gains. And that way you defer taxes into the future. That's the point of the minimization algorithm to, tax lot tracking. It's like, it doesn't change the magnitude, it changes the timing. And so, NFTs, even if it's not perfectly supported, you can kind of use common sense on that. But yeah, we're always making the NFT tooling better, and I'm pretty impressed at what has been built recently. So getting there.
Excellent. Lion Loaded.
Cool.
Do you have
Next
a question today?
It's a pretty good segue to my question, if you wouldn't mind.
Okay, sure. Danny, go ahead, and then August.
Yeah, thanks. First of all, big fans of TokenTax. Shout out to the support team. They were awesome last year. But I have a ton of illiquid JPEGs, as I'm sure a lot of people here do, with literally zero bid. So is the guidance to try to sell it for $1 or a penny? Or
yeah, in a nutshell, yeah. I mean, be careful.
As long as it's an arm's length transaction, yeah. As long as you sell it, and we have a lot of people that are trying to send their NFTs to a burn contract or sell it to another one of their own wallets, and that while it should be obvious, is not really okay.
Burning
but if you find someone who is a legit other third party and willing to buy your NFT for $1, that would be a way to take advantage of the tax loss.
But honestly, try to sell it on OpenSea or a marketplace or something more clear versus documenting that you sold it to your brother. A lot of people are I sold it to my wife, and the IRS might, even if you documented it, and if you do, write emails and say, this cannot be reversed and blah, blah, blah. But try to find a marketplace, some third party.
Technically you could list it on OpenSea and then have said friend come and pick it up off you, and then you just got to pay a bunch of gas fees, but probably still a net win if you're ending up with a big loss.
Yeah, it would probably be better to have it be someone totally unrelated. But yeah, that's probably
as far from you as possible. Randoms on TG.
Arm's length is
bro, buy these NFTs off me and I'll send you ETH. Okay, new scam.
Maybe Arthur help to define arm's length.
Yeah. What is arm's length as a rule?
You can't sell it to a company you own. We probably don't want to go down that rabbit hole and accounting technicalities, but I think you'll know it when you see it. If you sell it to your kid, to a company you control, probably not arm's length. But
Yeah,
it's
the
a bit
key
of
is that people are independent and not influencing one another. That's the sort of high level summary.
Yeah. So if you set this up privately with someone, even through a Telegram, it's
Next question.
technically
Yeah, even through Telegram. Yeah, that's right. Next question
negating
is
the whole
probably
thing.
right move.
They have to
Correct.
naturally want to actually buy it, not to help you with a tax loss.
Correct.
Taps
Correct.
his nose subtly. Okay.
That's right.
Y'all heard it here
You
first.
could also write that off as a worthless asset if it's technically not sellable anymore. Am I correct in that?
That's pretty aggressive, honestly, because then if it goes up in value next year, what leg do you have to stand on? But yeah, theoretically, if it's actually a bankrupt company or something that you bought, that's what worthless securities are for. But on the spectrum, and again, this is like a vast simplification just for the benefit of this spaces, but that's more aggressive than selling it on OpenSea for a penny or whatever, or for $1. But use worthless securities sparingly. And when people were writing off tokens in 2017, they took these tax losses and then they came back to life in 2019. Now they have a bit of a problem because they wrote it off and now it's added a lot of complexity to their taxes. They arguably were too aggressive in writing things off. So be careful about that. I mean, it's not as simple as you just made it sound. So I just want to add that.
Right. I was more referring to if the project was like some scam or something that's just totally
like a rug
now, and you literally don't have the capabilities to sell that anymore.
Yeah, maybe like a rugged token.
It's possible, but yeah, I mean, the word scam even in and of itself is maybe, you don't want it to be a casualty loss, to be honest, because that may not be deductible. There's a lot of things here. It's unfortunately welcome to everything in taxes. It's all very Byzantine, and there's way more rules than you'd imagine on every little wrinkle. And that's why we kind of said, if at all possible, find a marketplace that will sell it or that will take it. And otherwise, there could be creative solutions. I guess writing off is on the spectrum. It's on the spectrum, but.
Okay. Thanks for chiming in there, Joe, to give us a little of an idea and some discussion. Lion Loaded, thanks for being patient. You're up next.
Hey guys, thanks for taking my questions. I actually have a couple of questions, but my first one revolves around rebase tokens and figuring out the fair market value for the rebases. Are you supposed to take into account the fair market value of every single rebase, or should you be taking like a monthly average approach?
All right, next question. No. So rebasing tokens are another total third rail. Like, we can talk about them. First of all, there are many of them, and an ivory tower discussion. Oh, is it dividend paid in kind? Is it this? Is it that? And versus what's possible on the blockchain. I kind of just want to say, look, we're meeting of the minds on many of these things, meeting with the projects, talking about what would be the ideal way to treat them. But yeah, a lot of smart people are disagreeing about it. I think the smartest thing you can do in a situation that has so little clear guidance is just use common sense. Plan for a worst case scenario. What if it is all ordinary income? What if it is all dividend paid in kind? What if it is? And then, look at the real world applications of how you can calculate that, how you can figure it out. But yeah, the more tracking you can do for yourself, the better it will be. I would rather take that question on a case by case basis, because people have a tendency to run with some, guidance that might apply to one project and then apply it to another project, and they're just not as similar as what people think under the hood. And your intent matters here, right? If you're writing an email saying, hey, I'm pretty sure this is ordinary income, but I want to treat it as a capital gain. Well, treat it as ordinary income, because you've kind of like made your own argument against yourself, right? So I think intent matters here is all I can really say. That's
what I figured. Thank you. The next question would be, so in the proposal bill for the infrastructure bill, there was a section stating that wash sale rules would be in effect for crypto starting in 2022, as well as no longer being able to use the LIFO method to calculate gains, since crypto is not inventory. So I'm wondering if you have any insight on that.
Yeah, we'll see. I mean, a lot of things get proposed. We'll see. Let's see if it gets passed, and then we'll see which parts of it make it through and don't get challenged legally. What we always kind of say is like wash sale rules. I mean, who knows if they apply? Kind of like in the absence of clear guidance. I know I sound like a broken record, but use common sense. If you sold something for a loss and immediately bought it back. I don't know. Does that have economic substance, or should that be disallowed? So, it's always kind of smarter to think about it like, hey, what if they always applied retroactive, the way the IRS gave guidance last October 2019, and they said, hey, we had forks and airdrops have always been income, and hundreds of thousands of people had to like decide if they're going to go amend their returns. So always kind of plan for what it could be. But yeah, it is really nice, I can say, to see some clear guidance. And some other things you could do if wash sale rules apply: sell something at a loss and buy a correlated asset, or wait 30 days. And then you don't have anything to worry about versus then stressing. Are they going to notice that? Are they going to see that? Are they going to back it out? There are more important things. Your life utility can be more important than some of these optimizations. But yeah, it is really interesting to see it written in there, because it implies, a level of precision you never gave guidance on before.
Yeah, it seems like everyone is on the same page. Just a quick background: I actually work at an accounting firm, which we're seeing a lot of demand for, this DeFi accounting, and these are just some of these gray area questions where no one seems to have an answer. And it seems like you're saying the same thing. Just basically use common sense and try to apply other similar rules to it. Then one last quick question. I'm not sure if you're going to be familiar with this, but would it be possible to run payroll through a MetaMask wallet? Are you familiar with any softwares that allow for this? I've been looking into Bitwage to do this, but I haven't been accepted for my account yet. I just wanted to see if you are familiar with this setup.
Yeah, that's a great question. I mean, Bitwage could be an option. A lot of the people that we see doing that, they just do it manually, keep track of their books. They have their bookkeeper who figures out exactly how much was sent. They're doing it in Excel. It's very manual. But you're right. There's absolutely a killer app needed. I'm not aware of any that are doing great on it. Maybe someone else has more, but try Bitwage.
Well, yeah. The bookkeeping part is one thing. The other would be the the withholdings for the taxes and the reportings and all of that. So doing that manually would be kind of a hassle. So that's why I'm kind of looking for a software.
I'm sure someone somewhere is building it, and if not, hopefully they'll get the idea from this. But
if they're not,
as of now, I'm not aware of anything that works perfectly for that. But it's definitely needed, and I bet there are already some solutions.
Yeah, for sure. Yeah, I mean, I did have a couple more questions, but I feel like I've already taken up too much of the time, and the rest of my questions would be kind of other gray areas where I'm assuming you just think, there's no clear explanations on it yet. But I appreciate you guys taking the time to answer these questions.
Yeah, appreciate it, Lion. And just as an overarching here for anyone who's listening, and
it's been helpful.
Hey, Zach. I don't know if Zach can hear me. I think I've been muted by Zach, or coming in and out. But either way,
any other questions?
Yeah.
Yeah.
I'm sure there are none.
I'm here, Zach. I just want to comment here real quick for anyone listening.
Yeah, and, some things I can say is like this.
Zach,
is one of the
can you hear me?
Yeah.
Hey, Zach. Zach, are you hearing people?
I think he muted me specifically.
Maybe. Random task specifically.
RT,
I'll message him.
Dude, RT, you must have been.
I don't know, man. I came in here. I got a blunt in my mouth on my PFP. Doesn't like it. No. Okay, I just wanted to comment here because there's been a lot of this, common sense. It's vague. It can be, I think, a little bit disconcerting to people who are like, what the hell is going on here? I don't understand. I've been going through this for about 3 months. I've hired an accounting firm. I have also signed up for TokenTax because I want that automation to kind of help them get through the hourlies that they're charging me. And I'll just say this. At the end of the day, every accountant you talk to is going to have a different answer for certain things. There's a lot of interpretation in the law that is the nature of the law. It's why there's all these precedent-setting cases, the new interpretation. And there's going to be a lot to sift through. And at the end of the day, I think the most important thing is that and this is my takeaways, and I just want to get this in before we get through the rest of the Q&A, know your number, right? Have that kind of bottom line number. And this is what every accountant I've talked to, and I've talked to about 6 different firms, and they all just say, look, you got to know your number. You got to know that kind of conservative number before you take any losses, before you do anything aggressive. That's the number based on pure net, how much you have versus how much you had before, and then owe that at the highest tax bracket or whatever. If that's your number, and then you just work within that and just be available to pay that amount, and you're safe. And after that, you can get greasy and start looking at aggressive plays and how to be more interpretive with your losses or whatever you want to call it. If you can do that, and if you can show a workbook and you've hired somebody or you've done the work, you get a good faith audit from what I've been told. And then just remembering that even after all that, it's like a 15 to 20% chance you're audited. So just having that stuff ready, having your stuff, your ducks in order. And then this stuff for me got a lot less stressful when I realized all that. So if anyone here is like listening and they're like, what the fuck? That's been kind of my takeaway over the last 3 or 4 months. And if it's a really small account and you're not even, it's like 5, 10K, it's something that if you got stuck with it a year later, theoretically you could pay it off with like a job you have, then you don't really have to stress as much at all. I think you can probably, fire it off as a capital gain. But again, not a tax advisor. I just wanted to make sure people didn't get too spun around here by the sort of vague, open-ended, interpretive answers, because that is what all accountants are dealing with right now.
That's from an accountant standpoint, I will say that's good advice.
Okay, excellent. Thank you for. I realized I was like, okay, you're tickling tax advice here, RT. Shut up.
No, you're fine. You're fine.
The Height of Hype has a question. What do you got? Yeah.
What's up, y'all? How are you?
Good, man. Welcome to Frog Radio.
Thank you. I appreciate you taking my call, and I'm glad I chimed in because you touched on something in the very beginning of the episode that I have been very curious about. Just to put it plainly, I've had a lot of money in my bank account that I know is not mine. Like, I know I have to pay it in 4 months, and it's really sucked. And the idea of paying quarterly taxes is something I'd be very interested in. That way I could go ahead and get it out. I would go ahead and pay what I'm obligated to do so. That way I wouldn't have to have this looming lump sum over my head for an extended period of time. Do you have any resources available to research on that? Or are there qualifications you have to meet in order to qualify to pay quarterly taxes? Or is that a service you provide? Thank you.
It is a service we provide. You do not need to qualify. The IRS would love it if you paid them quarterly taxes. They would love it if everyone paid them quarterly taxes. You will. Yeah, we can certainly help you with that. The IRS's website, just look up estimated tax payments, is a good resource. I mean, as a starting point, your state may have a similar requirement depending on what state it is. But yeah, no, you absolutely. You are. I will say you're probably in the minority in terms of wanting to do it, but
right.
No.
I understand it's not the sexiest thing to do, but for me, I feel that it's best for my interest.
Yeah, just as a general matter, they are happy to take your money.
I'm right there with you, dude. I like to just get it off the books. It's like if it's not mine, I don't even want to look at it.
Exactly, that's the thing. Like I look at my bank account, it just makes me sick.
And I'm thinking about taxes all year anyways. Might as well just be chunking it away quarterly instead of looking at a whole year of friggin' transactions. Yeah, I wish we could do that. I don't think they do that in Canada, but I might be wrong, and maybe I should check.
Yeah, certainly. Feel free to reach out to us. I mean, we it's not like our core offering, but we definitely do it for our clients. Help you calculate what you should owe for that particular quarter. Again, there are safe harbor rules that make it much easier to figure that out without extensive calculations. And then certainly we can do it. Any CPA worth their salt will be able to help you figure that out as well. So it doesn't have to be us. We're happy to do it though.
Excellent. Thank you all so much. I appreciate it.
Sure.
Bye-bye.
Okay, great. We've got I Am Prince Abdul up next. Or do we? All right. I think we'll go ahead with Soul Dog. Or no, is Soul Dog still here? I think you asked a question already.
Hey, real quick, guys, I wanted to ask the TokenTax people, because I do feel like this is a really, really important episode of Frog Radio. How much more time do you guys have? I know you're super busy. I don't want to force you to be longer than you can be here. So what are we looking at, guys?
I'm free after this. I can stay on for a bit longer. I don't know. I can't speak for Alex and Zach. So if you want that full TokenTax flavor, we'd have to wait for them to jump in. But I'm available for a bit longer.
Yeah, I'm still here.
I think Zach's back in. I think he had to drop and came back due to technical difficulties, which you guys may need to promote him again to speaker.
Yeah, I just promoted him to speaker. So what we'll do is aim to go for maybe like 30 more minutes, if that sounds good to you guys. And, I think that'd give us some more time to answer everybody's questions.
That's fine with me personally.
Okay. All right. Well, rock and roll. Continue, RT.
Yeah, okay. And on that note, I would like to try to limit it to one question each because we do have about 10 requests here, and it'd be really nice if we get through them. With that, let's go ahead with Samuel, Trader's Insight.
Hey, how's it going, everybody? I took a look at fees WTF today, and I wasn't happy. And then I took a look at TokenTax, and it looks like you guys are kind of taking a conservative case of using basis for all the fees that I pay. So I read the article that you guys have where you have the conservative case and more aggressive case for either counting fees as zero basis or just counting them as in full. So I was wondering if you could discuss that. And also, as a second point, would it make sense to move my assets into a business like an LLC or something so that I can actually claim them as an expense for 2022?
Two very good questions. So for the first one, and they're actually related, they're great related questions. So for the first question, I had a little bit of trouble hearing, but I think you're asking about fees and gas paid to engage in various transactions. And so the general guidance on this is that if you're paying a fee for purposes of acquiring an asset, so the traditional finance comparison is paying like a brokerage commission to like buy some stock or engage in a trade. Then you would capitalize that fee into the cost of that asset, which means you don't really get a deduction for it right now, but it means that you paid a little bit extra for that asset. So when you turn around and sell it, you basically realize some benefit from having paid that fee. On the other hand, fees that you pay, like a comparison would be just a regular management fee that you're paying to like a brokerage, or in the crypto world, for example, a fee that you pay to claim rewards. Those are things that are classified generally as investment expenses. And so if something, these are simple examples, but there are many others. If something's classified as an investment expense, whether you can deduct that is going to depend on whether you're considered a trader business, whether you're running this as a trader business. And so if you are, then yeah, generally speaking, investment expenses will be deductible. If you're not, they were deductible to a certain extent up until 2018, but the laws changed. And so investment expenses for individuals, generally speaking, are not considered deductions. So that sort of ties into your second question, which is, if you set up an LLC or something, we get this question like a ton, like, hey, can I just set up an LLC to, do my crypto and does that help me? And so the answer there is actually a little bit more complicated. The LLC in and of itself doesn't really do anything in most situations, except provide you some, additional legal protections to the extent you have assets outside of the LLC that you want to protect from, lawsuits or something like that. I'm sure there are attorneys that can speak to that much better than I can. But the real question, I think, fundamentally is whether you want to try to classify your crypto activity as trader business activity. And that's a complicated one. There are a bunch of requirements that you would have to meet to be able to call something a trader business. It's not something you're going to be changing one year over the other. You have to, I think, among other things, you have to be, spending 500 hours doing it. And there are other requirements, and it's pretty tricky. And there are pros and cons to doing it. So if you call it trader business income, then generally you're going to be subject to additional taxes on it. You're going to be paying some self-employment tax if you're an individual, and that's like an extra 15%. So while you're right that you would get the benefit of some of those deductions, you're also going to be paying, some additional taxes. And so there are others too, right? There's QBI, there's net investment income tax that can be on the other side. I won't go into all the details. The bottom line is that you have to do the calculus for yourself, see if you can actually qualify as a trader business. And even if you can, you may not want to, because for many people, for many casual crypto traders, the additional tax burden does not offset the value of the deductions that they're getting. So hopefully that answers both your questions, but let me know if there's anything else.
No, I think it does. I think with the so if I'm paying $1,000 for an NFT drop for the first or something, I can claim that against the tax NFT, right? When I get to sell it.
Sorry, you're a little bit hard to hear, but I think you're saying if you're paying $1,000 to mint an NFT, you can claim it. And yeah, I think that the short answer, obviously we'd have to look at the specific transaction, but based on what you're saying, it sounds like we would capitalize that into the value of the NFT. And so you wouldn't claim it as a deduction, but you might get it, later on. you would get a higher basis.
Now, I'm going to give a quick Canadian translation. The concept of an LLC. I spoke to a consultant this year, and if you're in, now I don't know if this is all of Canada, but in Ontario specifically, if you're a trader, and I am, let's be honest, I do some investing, but I am a trader. I'm going to be paying that higher tax bracket on basically everything, and that's fine. In Canada, the max tax bracket, if you do that as a person, is 53%. And that's after 500K total gain. You're paying 53% on everything above that. If you roll those assets into a corporation and you work from a business, the business business income max tax bracket is 26% after 500K. And so it is a significant difference. And there is a form called a Section 85 rollover that you can basically grab all of your crypto, establish your cost basis, file that, and then it moves all of those from personal into a corporation. So that is something to look up and Google and find a consultant to help you do that. If you think you are a trader and if you have some gains this year that you would like to shelter within something, it's not illegal, it's not shady, it's totally legit. And it's something that I'm doing this year. And I am, that's a Canadian thing though. I don't know if that applies in the States, but I just wanted to get that into this episode on the record. Totally. Crypto Tally 2, you're up.
Hey guys, so first you're doing this. Basically what I'm trying to figure out is this wash trading rule. I'm under the impression that it doesn't apply to crypto before the 2022 possible infrastructure implementation. So if I were to be in and out but never in cash, just trading from one to another crypto, am I looking at what is basically the timeline for which I have to be into one asset into another for it to still be considered long-term versus short-term?
I think I'm hearing two separate questions. The long-term, short-term thing kind of threw me. Maybe I'm just missing something. But as far as the wash sale rules, we get this question a ton. And yeah, like while you're right that technically the wash sale rules today apply to securities. And, the service has been pretty clear that the crypto is not considered a security, at least for now. And yeah, you're right that they're going to be pretty, it seems like they're going to be explicit. But they're going to be pretty explicit in, future legislation as they, it's in their interest to do so. The thing about engaging in sort of wash sales at this stage is that you could very easily trip what's called there's sort of like catch-alls in the tax code. So one of them is like if you're doing something that doesn't have economic substance, if you're doing something just for the tax benefit, then you have to be prepared for the idea that the IRS could come in the event of an audit, sort of disallow what you've done. Because if you're not doing it, for actual economic benefit, then there's no, if you're just doing it to avoid taxes, they can say, hey, this is a principal purpose transaction, or this is is this just you're basically abusing the rules, and we're going to disallow it. So I don't know. I got a little sense that later on you were asking about wrapping and unwrapping. I'm not 100% sure. I might have missed a piece of it. So let me know if I didn't quite answer your question.
So basically all I'm wondering is if I was just like trading from one asset to another, purely speculative base, not for, tax purposes, and I'm still within that time frame of not going into dollars or whatever, I'm just trading from one crypto to another. I was just wondering if that was still I would still be counted for long term, or would I be counted as short term, even though I'm not technically realizing the gain? I'm just going from one asset to another.
You mean like similar assets,
yeah,
right? Because usually going from one asset to another, if they're like, yeah, I mean, the short answer is, any crypto to crypto trade is considered a taxable event. So there are people who don't agree with that and think that like wrapping ETH or something like that is should be considered not taxable. And like, while that's logical, the IRS has only issued, very limited guidance, and the limited guidance we have from them says that if you trade one cryptocurrency for another cryptocurrency, like that's a taxable event. So to answer your question specifically, like if you trade something, your holding period ends and then you've acquired something new, and then that's a new holding period. And so if you trade again, that's probably going to be short term.
Gotcha. Thank you.
Sure.
Yeah, and that was a really good quick tip that I got from an accountant this year as well. He said you'll save a lot of time in whatever hourly you're paying to an accountant if you don't swap on dexes between two cryptos. Basically ending and starting everything in stablecoin makes their job a lot easier. He said, dude, when you go from altcoin A to altcoin B and altcoin C and then back to dollars and then altcoin B and then Bitcoin, he's like, when you just fly around like that, it takes us 5x as much time, and you're going to pay for that in the accounting. So just a quick tip. And since then, I've started going straight from stable or back to, it's helped a lot.
One thing I'd add on that, I mean, that's what, software like TokenTax helps you do. We can definitely calculate what the basis is when you're going from all these various currencies. So
that's why I signed up of the accounting.
Yeah, while that is like, if you're doing all this stuff manually as an accountant, for sure, you're going to have a bad time.
Yeah, and that's exactly, I told them I'm going to sign up for TokenTax so they can start using your automation to their advantage. Okay, let's see. We got CB wasting time. Come on up and waste our time, baby. That's Krabby Bill. Yeah, there you go.
Yeah, thanks for pulling me in there. I just forgot my question right as somebody came in the room and interrupted me. So drop me back down and I'll pop back up when I get it back on my brain.
All right, I appreciate the honesty, man. It happens to the best of us.
Thanks.
Loco is free.
Yeah, hey guys, can you hear me?
Crispy, baby.
Awesome. Yeah, so this is just a comment or a tip for people who are interested in doing estimated payments throughout the year. A lot of the times, people are trying to rebuild their activity from the previous year. So they'll start, let's say in January or in December later in the year to get an idea of what they're trying to pay. But what you could do is, if you pay for, let's say, the next year of TokenTax, you could start reconciling your transactions on a monthly or quarterly basis. That way you have an idea of what you have to pay quarterly coming up. So there's always that you could do. But I just wanted to chime in and say, hey, and thank you guys.
I appreciate that.
Thanks. Yeah, we love that idea. If you definitely want to buy the next year ahead of time, we are not going to fight you on that. I think it's great. It will help you and it'll help us, obviously.
Yeah, taxes in general, in my experience, have been something just to get ahead of. It's so much harder to go way back in time. It's like, I don't know what the hell I was doing last April. Yogi Bullish Bear, you're up next.
Yo, what's up, guys? Thanks for having me on. I just had a quick question in regards to NFTs and trading. I'm in the process of making my first direct trade with someone. I'm using one of these sites that it's like an escrow service, and I was just curious as far as what the obligations were and if there were tax obligations for these situations. And I'll just throw out a few different scenarios. I guess the first one would be, if two parties just recently minted NFTs, which have not been bought or sold yet, and they swap, is there any sort of obligation there? And then other scenario I would say is, let's say someone bought an NFT for 5 ETH, and then the other party bought an NFT for 4 ETH, and then they wanted to do a direct swap of those two NFTs. Is there any sort of obligation or anything that you would be able to offset in those situations? Thanks.
Yeah, the short answer is yes. Should be a taxable event. If you trade your Honda Civic for another car, it's a taxable event. If you dispose of any asset, it's a taxable event. Somebody asked about crypto to crypto. This isn't really a gray area. So
the hard part is the valuation aspect.
So then for that scenario that I had brought up first, the one where you just minted the NFT, it's never been bought or sold yet. How would you go about figuring out what that would be?
So the question is, when you mint, a lot of times when you mint, you have to spend ETH or something else, right, in order to mint?
Yeah.
So if you're spending that ETH, presumably you bought that ETH at some other point. Spending ETH is basically, trading ETH for crypto or trading it for fiat. Either way, that part of it is going to be a taxable event. The acquisition of the NFT, probably not taxable, but depends on the specifics of the contract.
if you bought it with dollars or something. But yeah, like to be super specific, if you paid somebody in tokens that you minted, and instead of paying them $100,000 to be a dev on your project, you probably have a taxable event of spending 100 grand in crypto. So a lot of people are like, I created my own token. I'm just paying people in tokens. Why would I have any tax obligation? And it's like, well, you had nothing, and now you've paid people. You've gotten $2 million worth of services from people. So you probably have a taxable event. But it comes down to common sense a little bit. But yeah, you're absolutely right. Total gray area. But just kind of use common sense. An NFT with no value for another NFT, yeah, that's going to be one of the hardest things. But it would at least have the value, like Arthur mentioned, of the ETH you put into mint it.
Okay, cool. Thanks.
Great question. Thanks, Yogi. We've got I am Prince Abdul up next with a question.
Hi guys, thanks for having me. Can you hear me?
Yeah, we got you.
This is new to me, and I think for me, I'm just trying to figure out what would be, besides the trading that you've mentioned, what would you consider all of the taxable events that you could have, be from wrap token, B-based tokens, or trading from stablecoin to the other. The only piece that I do know is the one that's mostly talked about by Michael Silva, which is provided you don't sell, it's not a taxable event and you don't have to worry about it. Besides that, is there anything that we should be worried about?
It's easier to answer the opposite. The only thing that's not a taxable event for sure in the IRS's eyes is buying crypto with fiat or dollars. That's the only thing, potentially. Or
borrowing.
Transferring.
Yeah, if I take out a loan with like block fee, I deposit Bitcoin, and then I borrow.
Not a taxable
Yeah, so it's easier to know what's definitely not a taxable event, which are those things. And, that has its own challenges of like, oh, I borrowed something, then sold it. Now it looks like I have missing cost basis. Now this is wrong. Requires a lot of manual work. But yeah, technically borrowing wouldn't be a taxable event, theoretically.
Gotcha. Thank you.
Hey, I've actually got a question, because there's a lot of borrowing and lending in the crypto markets right now. Let's say that you deposited some Bitcoin or something like that to some kind of protocol, and you put dollars against that. But then the collateral that you had deposited was liquidated. Is there any tax implications, regarding that, and the sense that, I kind of did get, realize a capital gain there, but, gray area, maybe I didn't. I mean, do you guys have any comments on that kind of scenario?
Yeah, it's a taxable event. If you had some crypto somewhere and now you don't have it anymore, that's a disposal. But yeah, I mean, I hear what you're saying, why it would be a gray area, but it's the borrowing part. If you got liquidated, it's a taxable event.
Things like, come on, dude, like, like you don't have this anymore and now you have this, and
yeah, exactly.
I mean, a liquidation is a forced
common
sell.
sense of like what happened, and all right, what was the economic impact? What did you start with? What do you have? Let's do the accounting gymnastics to get it into a tax form that the IRS will understand. But it's pretty simple. If you had one Bitcoin and you deposited it somewhere and borrowed against it, and you got liquidated and you paid $10,000 for that Bitcoin, well, that's a disposal to pay, a $10,000, whatever it is, a fee or a spend, And so then it's like figuring out. So whether it's a taxable event isn't really a gray area, but what was your gain? What was your loss, et cetera? That is the part that's hard and more of a gray area, if that makes sense.
Yeah, I mean, because a liquidation by definition is really
unless your collateral
selling.
was dollars, in which case maybe not.
You're right, RT. Zach, I think you may still not be able to hear RT. Yeah, it's a forced sell. It's like it's just as if you sold. It's as if you sold whatever collateral you put up in exchange for the forgiveness of whatever debt you had taken out. So that's definitely a liquidation is definitely a taxable event.
Okay, excellent. Let's go with ROOC.
Yeah, so I had a pretty, annoying situation I'm sure we all come across every so often. Can you count like getting rugged as a loss? Like, say I have NFTs which are impossible to sell, right? But I put money into.
That kind of came up earlier.
I mean, it's totally a gray area, like Arthur talked about earlier. Look, in the real world, we want to try to understand what you did, and what's the economic impact of that. And this is part of the reason why it might make sense to have a legal structure. You know, it could be something like, oh, if that specifically is a casualty loss, it might be disallowed. There's no one size fits all. It's very complicated. From a common sense perspective, it feels like you should get credit for it. But unfortunately, with the accounting rules as they are, you kind of have to figure out, oh, was it property held for investment? You know, there are a number of ways. There isn't a super clear answer. Unfortunately, it's kind of case by case basis. But theoretically, you'd get something for the cost basis. But you know, it's not a guarantee. It kind of depends what happened.
Okay.
Now here's the thing, and this is not tax advice, and this is just me bantering here. But when you file, you are just stating a claim, right? You're making you're claiming, you're making a case. Now, me personally, I have not been rugged on an NFT, thank God. I've definitely bought some ones that are no bid, so maybe that's a rug. I don't know, but there's no floor. But the team is active. If I did have one that literally turned into like digital trash, it's just code that is worthless and never going to be sold again, and it's gone, I'm probably going to claim that as a loss. And if it's like obviously not hugely significant, because I don't want to be screwed later. Now, if in the case of an audit, you have this conversation, you go and you make your case, you know, there's room there, right? Like, I mean, sometimes I think when I'm filing taxes, I'm being audited. I'm like, well, not necessarily. But I think at the end of the day, because I know that number, you know, that's, you know, that aggressive or that's conservative number, and you just make sure you have the capital available in case. But I don't know, am I way off here, guys? Or is that just stupid and risky?
It's a little dicey. It's kind of what you're talking about is borders on casualty loss, which used to be deductible to a certain extent, but isn't anymore. But you know, in the I got to be honest, I don't know the Canadian tax rules quite as well as I should, and so I think the casualty loss rules are pretty specific to the IRS. So it may be the case that it may be the case that it's okay in that tax regime, just not in the U.S.
We've got to make there's got to be like a burn contract. We could just send
another reason maybe to be a business in Canada. But yeah, RT, sorry I can't hear you. I don't know what's going on. Maybe you blocked me.
That's okay. No, I'm following you, man. Okay, let's go with So I mean, I might be way off there, guys. I just feel like there's got to be some way to write off a rug pull. But we've let's keep exploring this concept, because I'm sure people have different interpretations of it, and there's somebody somewhere who's figured it out. Wiggity.
And Wiggity, before you go, guys, what we're going to do here, we have a couple of more speakers. We're going to get through your questions. We're going to answer those questions. After we've answered the questions of the speakers that are up here, we're going to call it. So I know you guys could go on for hours and hours and hours. But you're probably at this point just going to have to, shoot TokenTax a DM or maybe whatever. I know they've talked for hours and hours and hours on the intercom and answered all sorts of questions.
Also super happy to answer any questions if you just mention us in Twitter. We love engaging with folks and threads and stuff, and we'll try our best to get you answers.
That's very kind of you.
Yeah, and that's the best way to do it. I really like to get good, broad questions out on Twitter publicly, because there's just going to be 100 people with the same question, which is great. So appreciate that, guys, for the offer. And Wiggity, you got the next spot on the floor. Or he's being shy. Maybe I said his name wrong, or he just stepped away for a sec. We'll go with DGen Genesis 24.
Hello, everyone. Thank you for your time. I joined a little late, so you might have answered this, but how do we account for liquidity provisions in our taxes? Do we count the LP tokens we get as a taxable event? Obviously, we would count the rewards we receive. If you could offer any insight on that. And if there's time for a second question, even if you do our due diligence and the best we can to report our taxes, what are the consequences other than an audit that one might face?
I can answer the Canadian tax consequences or whatever, but I'll wait for Arthur to go ahead with the first stuff.
Okay, thanks, RT. Yeah, thank you for asking that question. A lot of people feel like it shouldn't be taxable, but from a tax standpoint, yeah, I mean, it's a crypto to crypto trade. Even though economically what you're doing is depositing into a pool, to earn rewards in the future, you're still contributing some tokens in exchange for some other tokens. And so the general answer to that is yeah, it's probably a taxable event.
Even with the cost basis being the same?
Well, the basis at the time that you make the contribution, or I should say the value at the time of the contribution may be the same, but you may have acquired the tokens you're trading at a different time, right? So let's say you bought, ETH at some like prior juncture for, let's say 3,500, and you're contributing it into a liquidity pool with something else when it's worth 4,000. So at that point in time, you've actually realized a $500 gain. So although you're not like arbitraging or anything, you're still incurring a taxable event. That's the general rule. There are people who want to take more aggressive stances on that, but that's the general thought is that because it's another cryptocurrency, even though it's an LP token, it would be considered taxable.
And, and it's a spectrum, right? Like some people are like, hey, I feel really confident. I'm going to budget legal fees and I feel like X, but this is not a taxable event for these reasons. But you can imagine the moral hazard of just generally telling people it's not a taxable event. And then everybody, plugs in their wallets and thinks their taxes are whatever fraction of what they should be. So that's a more aggressive position. And it's literally a context by context basis, taking one token and it's exactly the same asset in every way other than it has a different ticker. Well, the IRS is going to look at that like they don't know the difference between ETH and wrapped ETH. This looks different to them, so that's the default that we're going back from. But it's a gray area, but use common sense, and if you're at that materiality level, get lawyers and get people to weigh in on it if you really want to take a more aggressive position.
All right, and real quick to your next question around the penalties, and this is an area that, just for peace of mind, I kept asking all these different accountants, and one of the consultants I spoke to was an auditor for the CRA, which is the Canadian sort of IRS. So I don't know how this applies to the IRS, but he said a few things that kind of helped me understand it. First of all, you can be audited 3 years back, standard, 7 years back if they suspect foul play. And so being on the hook for years in the past is in the ballpark. In those cases, if it's found that you owe money, it's 5% annually, I think, is the interest that's charged on that builds up over time, as well as a 50% penalty in Canada if they decide that you withheld or that there was some kind of foul play. And of course, beyond that, if they think you're full blown, trying to avoid all your taxes and just not paying on purpose, then there's like fraud and all this other crap or whatever. And you can look at, criminal charges and all that stuff. But if it's just pure like negligence and they say it's okay, it's a good faith audit, you just had no idea what you're doing, but you still owe this 50% penalty and this 5% annual interest or whatever. And that's the more likely case if you're just like most people in crypto, which is just like, yeah, I'm not an accountant, I'm not a tax person, and I'm just trying to, I think the most common thing is people saying, well, I'm just going to pay capital gain tax on whatever money I put in my bank. And that's probably the most common way that people are doing this. And in those cases, you may not get hit with fraud, but you're probably going to get hit with those penalties or that 5% is what he told me. So just to put some light on that for people. Is there something similar in the States that you guys could comment on?
Yeah, it's the same. It's roughly, it's a little different, but yeah, it's a 3-year statute of limitations and they can go back 6 if it's a material misstatement. And then if they suspect fraud or anything like that, then there's no limit. They can go wherever they want.
Oh, interesting. Okay, so there is like literally just no limit if you're messing around.
I'm probably overstating that a little bit, but yeah, it's a little bit more liberal than I think what you're describing for the CRA.
Okay. And one other interesting point is during an audit. First of all, he said, look, it's generally unlikely you're being audited. There's a lot of people. There's it's not a reason to not do it properly, but it's just a reason to like just relax a little bit. In the case of an audit, he said most oftentimes there's like 1 or 2 little things. They'll just check in with you. They say, okay, we see this is the work you've put in. This is the filing you've done. We just want to check 1 or 2 things. They'll ask for clarification, maybe a wallet address, maybe clarification on a specific transaction just to kind of check your, legitimacy. And then they'll move on. And he said that's the most common type of audit that he has seen. And then beyond that, he says in some cases, if they suspect all this stuff or it's a very large audit, they can actually they'll reach in and use analytic tools and check every wallet and blah, blah, blah. But he says that's actually much less common. So just a little bit of insight that kind of made me feel better. So, an audit doesn't mean they're looking at every single transaction as much as maybe just checking a few boxes. Melvin DeVitt. Oh, yeah, and I could be wrong. What do you got?
So I think that maybe we could take one or two more questions, and then we might want to wrap up. But I do want to have one announcement. So obviously this conversation, it can be a huge oversimplification because like taxes can't really be looked at in a general basis, and it's all about what people actually did. With the limited guidance that we have. So we have a lot of articles on our site that do dive into much, much, much more detail about all of these topics. And I would if you're still curious about any of these things, I'd highly recommend checking them out. Specifically about wrapping tokens, we have a great DeFi guide that talks about it, how LP tokens are treated, and all of the ways to kind of think about this spectrum. So I just wanted to say that if you still have more questions, definitely check those articles out because it will add more color on a lot of these topics. It's hard to answer questions in an absolute sense here.
Yeah, and much like financial advice, it is so specific to people, and that's why everyone's like, not financial advice, because you can't really offer broad stroke stuff like that. And I think tax is very much the same. So I would say just for someone to call a consultant too, or reach out to your guys' VIP kind of team. Scipius, one of our last questions today. What do you got?
It's sort of like a question, and also people were asking about tax loss harvesting with NFTs that basically went to zero. So there's a site/service called harvest.org. So you just pay the gas, and then it sends it to their contract, and it sends you back like a fraction of an ETH. Now doing that as well, I was just wondering kind of the legalities of that or something, because I guess it's sort of a sale. You're not burning it. It's going to an address. I don't know if it's a burn address, but you're getting I don't know, I guess $1. I don't even know how much it is back, but is that something that
interesting?
Fine.
What do you think, Arthur?
I mean, definitely do your research on if it was really a trade, what you're getting back. Is it actually like they said, arm's length? Can you make them reverse it? But yeah, I mean, it definitely sounds better than burning it. Let's put it that way. But we definitely can't give a clear yes or no. But honestly, OpenSea is a lot more robust in terms of being known. So if you could sell it for a penny on OpenSea, that's probably better. But if you can't, yeah, that sounds better than burning it, I suppose.
It sounds better, but I think the answer to this is be prepared to, if you had to explain this to somebody that was auditing your books, right? Explain the transaction, anytime you're doing something where the principal purpose is to reduce your tax liability, that's definitely sketchy, and going to be hard to explain to somebody who's calling it into question. Yes, this is a better alternative, but if you wouldn't be able to explain it with a straight face, then you're probably better off avoiding it now. Certainly not everybody's going to play that game, but that's the conservative. It's just the accountant and me being I wouldn't want to stress about that, so I probably wouldn't do it. But it's obviously your call.
Okay, cool.
All right,
thanks,
guys. Fair balanced response here. MD.
Yeah, thank you so much for the time, for having us here. Hopefully it was useful, and like Alex said, we're around.
Do we have time for one more? We do literally have one last guy in here.
Yeah, let's take it. One more question, and then we can wrap up.
One more question, guys, and then after that, we're gonna.
Sounds good. MD 20 or 261. You're up.
All right. Thanks for taking my question. So I basically have around 1,500 degen transactions on Avalanche, but the value I don't think doesn't justify the VIP plan. Do you offer tools or tips for those that want to reconcile their data themselves, or am I stuck looking at each transaction one by one and just trying to figure it out?
Yeah, at least you don't have 5,000 Avalanche transactions. Pause, file an extension, let the software build, or dedicate some time.
Yeah, we'll have. I mean, to add on Zach's thing. So we're gonna have more support throughout the year, and it might end up, if you actually don't want to do the work to file it, it might end up justifying the cost. We often have clients say the amount of time that we were able to save them justified their hourly rate if you actually equate it to how much time you're spending doing this stuff. So it's all about figuring out what makes sense for you. and just how much time you want to spend like doing your taxes if you're like a huge degen. So it just depends. I mean, I think like, reach out to someone on our team and we can kind of look at your data and kind of get you a better estimate. It's obviously hard to say without looking at anything.
Okay. Thanks for taking my question.
All right.
Yeah, I guess that's it. Once again, TokenTax has generally offered to engage and interact with everyone here on Twitter. So if you didn't get an opportunity to ask your question and you have general questions, I've asked them 100 questions on Twitter, and I've seen other people do it as well. So I know that they mean that they'll give their best effort to answering that. For anybody interested in their service, go check out their Twitter. It's going to have links to their website. There's all sorts of different tiers of plans, based on how degenerate you are, what your needs are. Are you multi-chain? Are you not? Do you want them to file your taxes for you, or do you just want them to prepare your taxes? If it's tax related and you're in crypto, they probably do it. Now they do DeFi and CeFi as well. So, if you primarily trade on Binance or FTX, I do believe it's probably just as simple as uploading your API keys. So make sure to check them out. TokenTax, guys, thank you so much for your time today. Obviously, very stressful end of year with people tax loss harvesting and all of our bags selling off. But hopefully, there are greener pastures ahead. Maybe so we can all afford our taxes next year. That would be fantastic. A little pump action. But guys, anything else you'd like to say before we end this?
Yeah, I mean, nothing too much. I just want to say thank you so much for having us. We love all the content that y'all put out, and we're huge fans of everything that this community is about. So we love working with everyone here, and we're just happy to be a part of it. And also, I know this is a huge oversimplification, but if you do have any other questions, ask us. We'll try to add more color, and we'll link you to any articles that are relevant to this, which give you much more language.
Perfect. All right, guys, thank you so much again for joining us, and we'll hope to catch up with you again soon. Maybe on the flip side of this tax season, we can have you back on later on next year.
Thank you so much.
Thank you, guys. Thanks very much.
All right. Cheers, guys. Take care.
Cool. Bye.